the channel. So today we will discuss about the VAT, UAE VAT and UAE taxation. So here we will discuss about what is supply goods or services. Where is the supply inside country or outside, like import or export? Scope of UAE VAT. What is the VAT treatment? Standard rated, zero rated, exempt or out of scope? Can VAT be recovered for purchases where VAT return, like map it to the correct boxes? So here let's start the video. So place of supply. So basically, in case of goods, place of supply will be the location where the goods located at the time of supply. So here the first is, suppose it's an UAE customer, and the supplier also resides in UAE. So the place of supply will be UAE. Suppose from UAE to Saudi Arabia. Saudi Arabia comes under KSA, so it will be an out of scope. Suppose from China to UAE, this is the export case. So here, this is an import. So UAE recipient will be under reverse charge mechanism, liable to pay tax. And suppose we are exporting goods from UAE to UK, then it will come under zero rated supplies, because export comes under zero rated. And now UV supplier to foreign customer. So here it will also be it will also be zero rated, and it is in a case of an export. So what is the scope of UAE VAT? There are four categories basically: standard rated, zero rated, exempt, and out of scope. Standard rated. Standard rated is 5%. Input VAT generally recoverable if the conditions are met. Zero rated. They are 0%. Taxable supply. Input VAT generally recoverable if the conditions are met. Exempt. No VAT. Related input VAT generally not recoverable. Out of scope. Not applicable. UE VAT does not arise at all. Now, standard rated supplies. So, on what falls here? Basically, the normal sale of goods, standard rated services, commercial property supplies, sale of business assets, vending machine sales, discounted sales. So, here I want to give you an example. Suppose the selling price is 1000. So, VAT charge 5%, that is 50 dirham. Then the customer will pay 1050 dirham. So, that will be the invoice value. Now, what is output VAT and input VAT? Output VAT basically charge on sales, and input VAT is charged on purchases. Whenever the output VAT is more than input VAT, we have to pay an additional tax. If the input tax is more than output VAT, then we will get a refund. So here is the example. Suppose Dharam 5000 is the output VAT, and 1000 is a recoverable input VAT, then the net payable will be 4000. Now, zero rated supplies and exempt supplies. So, basically, in case of zero rated supplies, what really falls here? So, basically, qualifying exports, certain education sector, healthcare sector, investment in precious metals, certain means of transport, certain international transportation, all falls under zero rated. So output VAT will be zero. Taxable supply is 0%. What falls in exempt supplies? So in exempt supplies, basically like export, or bare land, residential land, or financial services, all falls under exports. So here taxable supply is no, and output VAT is none. Now, what is out of scope? So, out of scope basically, so salary paid to employees, certain government fees, intra-VAT group transactions outside UAE place of supply, all falls under out of scope transactions. So, these transactions are outside the UAE VAT charge. So salary paid to employees, certain government fees, intra-VAT group transactions, or intra-VAT certain government fees, transaction outside UAE supply, all falls under out of scope. These transactions are outside the UAE VAT charge. Now, place of supply in case of services. So, in case of services, place of supply will be, we have to determine the general rule. Basically, what is the general rule? Place of supply is the place where the supplier is resident or established. But there are certain special categories like installation services, restaurant, hotel catering, cultural, artistic, sporting, and educational events, real estate related services, transportation services, telecom and electronic services. So there are six special categories. So in case of installation, so where the installation is taking place will be the place of supply. Hotel, whether hotel you stay booked in Dubai then perform in Dubai, so place of supply will be UAE. Event, where the performance is taken place, so foreign artists performed at Dubai concert, so place of supply will be UAE. Real estate, where the property is located, property location is UAE, so place of supply will be UAE. Transportation, so where the transportation begin. Suppose passenger transport starts in Dubai, so place of supply will be UAE. Telecom, service used or enjoyed in UAE. So actual usage is taking place in UAE, so place of supply will be UAE. Now reverse charge mechanism. So basically recipient act as both buyer and VAT accountant. So he will be responsible to pay tax under reverse charge mechanism. Supplier will not pay tax. Instead, recipient under registered recipient will pay tax to the government. So basically, suppose there's a foreign supplier and recipient resides in UAE. So he will report the in the VAT box 3 and 10 the total purchases made from import. So suppose if it's fully recoverable, so output VAT is 5,000, input VAT is 5,000. So net effect will be 0. Suppose it is partially recoverable, output VAT is 5,000, recoverable input VAT is only 2,500. So net VAT payable is 2,500. Now import and export. We know export is zero rating, so it will not basically it will not fall under VAT, and it so we give here. But what documentation is required is we have to give the commercial evidence, shipping documentation, certificates, airway bills. So we have to provide all the documents to claim zero rated supplies. Import. So basically, in case of an import, we have to pay tax in the reverse charge mechanism. We have to pay custom duties and it's taxable, so it will be charged. Here is an example. Suppose we are importing the CIF value is 1,000. Custom duty that we paid is 5,000. Taxable value is 1,05,000. VAT charge is 5250 at the rate 5%. Now we will discuss about the boxes. So basically in VAT return, box 1 is the standard rated supplies, that is 5%. Then tax refund provided to customers. Basically any refund is there will fall under box 2. Like tourists who are coming to Dubai claiming refund within 90 days will fall here. Then subject to reverse charge, all reverse charge supplies will come here. Zero rated supplies will come under box 4. Exempt supplies that we discussed will come in the box 5. Goods imported into UAE, like any imports will come in box 6. Any adjustments, import adjustments will come under box 7. Any RCM adjustments will come under box 8. Any basically purchases made under standard rate 5% will come under box 9. Any RCM purchases will come under box 10. Any goods imported into UAE, import adjustments will come under box 11. Any other adjustments will come under 12. And then total tax due Then box 14 is total recoverable tax. Box 15 is VAT payable. Now we will discuss about certain important provisions for VAT. So basically, VAT return and payments are due within 28 days after the end of your tax period. So if 28 days falls on weekend day, the deadline moves to next working day. So suppose the tax period is January to March. Due date is 20th April. So, what will be the due date? 20th April for January to March. Now, what is the late VAT return filing? So, basically, when you don't submit your VAT return, it is considered as late VAT return filing. So, what is the fine? Fine is 1000 dirham. And if you are repeating late filing within 24 months, then your fine becomes 2000 dirham. Then what is the fine for late VAT payment? So now you are not late filing, you are making a late VAT payment. So here now you have to pay 2% immediately on unpaid VAT tax and 4% on the 7th day after deadline on the remaining unpaid amount, and 1% per day thereafter, subject to applicable maximum. So now what is VAT refund? As we discussed earlier, if your VAT input is more than VAT output, you get a VAT refund. So then here we will discuss about basically tourist VAT refund scheme. So here you can read, this is totally a tourist VAT refund scheme. So basically, if the tourist from India visits Dubai and she's buying an eligible product from a retail participating in tourist refund scheme, then when he's leaving, she can validate eligible purchase and claim applicable tourist VAT refund. The tourist must meet the scheme condition. For example, currently states the tourist must generally be 18 plus, not be a UAE resident, have entered a tourist visa, spend at least 250 dirham excluding VAT, validate tax-free transaction within 90 days, present the good if required at the airport. So then he will be eligible for tourist refund scheme. So here I am ending the video. I hope this video find you useful and you able to understand the meaning of VAT, and thank you so much for watching this video. Please subscribe to the channel if you want more videos on Zoho, QuickBook or VAT. So please subscribe to the channel. Thank you so much.
वीडियोस बनाने हैं, फिल्मोरा है ना।